Today I'm going to go over two scenarios here with Trading SPY. Today I'm going to go over kind of a long-term trading strategy for SPY. This is trading it for 3 months. And so this isn't a cheap strategy. This isn't an intraday strategy. By the numbers of what I've seen in, what we're going to be looking for is we're going to be looking for contracts that are 3 months out from today's date and one contract. So basically we're going to base it off of one contract 3 months out, and we're going to see how much it costs and what that can actually get you. Now I've already looked at the numbers, and this isn't a cheap strategy. So we're going to be looking at riding the SPY for about 3 months with in the money contracts, and we're going to see how we're going to backtrack the last 3 months and see what we would have made if 3 months ago we did this. So we're going to kind of see what we could have made 3 months ago if we applied this strategy. So this isn't a cheap strategy, but this is a good alternative to just kind of sitting back. And the only pros and cons of this is you're going to have to sit through. You can take profit anytime you want, but you're going to have to, if you want to really ride it out for those 3 months, you're going to have to ride it out during those volatile times, especially during those key days with Trading SPY. But anyway, we're going to go into the options chain. We're going to see scenario of right now what it would actually cost and what that can actually return you if we look at it from the last 3 months. Okay, so the first thing we want to do is we want to look at SPY for the last 3 months. So we want to go here to our month, and we'll get a general idea here of how much we would have made in 3 months, or how much it moved in 3 months. So we'll start from this candle, which for you guys to know that today's actual date is September 30th, 2025. So three months ago would have been July 1st, around July 1st. So we're going to ride this out, and we're going to see how much it moved. It's right around there. So it moved about $81 in 63 days. SPY moved about $81 in 63 days. And I can already tell you right off the bat, if you rode that entire thing out for 3 months, it's about $8,000 for one contract. So real quickly, we're going to be going into the option chain here, and we're going to be seeing how much it would cost. Now, these are of today's prices. It's not the prices of what was 3 months ago, but it's the only way to really get a good estimate of how much it would cost. So we'll go to SPY, we'll go to options. Let's just say we're predicting it's going to go up in the next 3 months. So you want to go and you want to find something that's 3 months out. So since we're just hitting October here, we want to look for the end of the year, basically, October, November, December. So we want to look for the end of the year, basically. We're going to look for December 31st. That's 3 months from now. And now we want to find a price, and I said it's not going to be a cheap price because you're going 3 months out. And you want to get close as in the money as you can. Let's check this one out. One contract of this is about 5,000. Let's see how close we are to the, we need to get a little bit. So I try to get as close to this dot as possible so you get the best bang for your buck here. So we got to go a little more, fortunately. Let's go. I think we're going to need a little bit more here. Like I said, this isn't cheap, this strategy. This is probably for those that already have enough in your Robinhood account and that have been trading and just want to buy a contract for 3 months and wait it out and see what happens. Let's just go to 10,000 here and see where that lands. Right about here. This is 10,000. Okay, so we're not that close yet, but getting there, getting pretty close. So 10,000 right now will get you for 3 months with one contract. Let's go a little bit more. Let's see what this one is. It's still, this is way, let's go to 15,000. Getting closer. Getting closer. Let's go to 20. It's around about 20. Right here. Okay, so this is one I probably would buy. So, one contract for 20,000, and you ride that out for 3 months. And basically what we saw from the charts is the last 3 months. The last 3 months it went to about $80. Basically you would buy it here and you just ride it out. You ride out the volatility of it. And once you're in profit, you can take profit anytime you want. But if you want to ride it out for those 3 months, let's just say $80. So 670 plus 80. So it would be about 750. So this would have to go to about 750. Here, so this is 3 months right here. This is another $80. So you would turn that 20,000 into about $8,000 in 3 months. So that's kind of how you ride SPY. You do kind of have to, for you to do this, what I would suggest is before you enter this, make sure there's a good enough dip with SPY, good enough pullback to where you could just take profit. If you feel like you want to take profit, you could take profit anytime you want within those 3 months. But this is basically how you just buy one contract and you wait it out for 3 months. You can take profit anytime you want within those 3 months. But basically, it's just more of a set and forget kind of situation. You just got to make sure there's a good dip before you enter, and then you ride it out for 3 months. So you won't find those dips if you look at the monthly. You got to go to a smaller time frame, maybe the day, and just wait for a little bit of a dip, and then you ride it out for 3 months. The strategy is only for those that have enough to cover it for 3 months. Most people will do this for intraday because people want that daily passive income. But this is more of kind of way to build more of passive income because generally the S&P moves up over time. So you definitely do not want to do this when it's going down. Generally it goes up over time, but you just make sure you read the charts well enough because it can go against you. But what I would do is if I was doing it for 3 months is I would just take profit along the way. And if you're going to wait for 3 months, you could take profit along the way. You just would have to re-enter again, wait for a price to drop down a little bit, and then re-enter for another 3 months. So that's kind of how to turn it into passive income. Now, that 20,000 will give you, that's one contract for 3 months. But if you wanted to do 2 contracts, it would probably cost about 40. So it would cost you about 40,000 to do 2 contracts and wait it out for 3 months. So when you're at 2 contracts and you're waiting out for 3 months, you're basically making $200 for every dollar. Just like everything else, once you reach 20,000, you can write it out for 3 months, collect your profit along the way whenever you want to take profit, but the contract's for 3 months. And then once you have another 20,000 in there, you can go to 40,000, and then you can ride that for 3 months. And then you'll be making $200 for every dollar for the next 3 months. And then the 60,000 will be 3 contracts. And you'll basically have 3 contracts riding for the next 3 months, and then you'll be making $300 for every dollar for the next 3 months. So then you can kind of scale it up that way. This is more long-term and a way to ride SPY. Now for this strategy, just make sure you find a good enough drop before you enter again. So this is kind of like my strategy. This is for entertainment purposes only, and this is I'm not responsible for any profit or loss. So just make sure you do your own research. Anyway, if you guys like this video, make sure to hit the like button, hit the subscribe button. I'll see you guys in future videos.